Markets are attempting a rebound this morning. Global markets are starting the week off positive after stocks saw their worst week in years last week. Futures indicating a gain at the start of trading this morning of 300 points, 1.25% higher on the Dow and on the S&P this morning. Joining us right now to weigh in is former Reagan budget director David Stockman. David, it's good to see you. Thanks so much for joining us.
Happy to be here.
First off, your thoughts on markets as interest rates move higher. This has been a real concern of yours, actually, the budget and the spending levels.
Right. We're having a dead cat bounce apparently this morning, but I think it's all over except the shouting. Last week, they crossed the fiscal Rubicon. We have now created a catastrophe for fiscal 2019. It begins in October. They're going to borrow $1.2 trillion at a time when the Fed, for the first time in 30 years, is going to be shrinking its balance sheet, which is the same thing as selling bonds into a bond market that the Treasury is extracting $1.2 trillion from. Now, they have said this is on automatic pilot. They're not even publishing the schedule anymore. They want no doubt that they're going to be shrinking at a $600 billion rate beginning October 1. Now, if you add $600 billion that they're dumping into the market with $1.2 trillion that the Treasury is going to be extracting from the market, who is going to fund that massive $1.8 trillion number at current interest rates? It's not going to happen. There's going to be a bond market collision of epic proportions. Yields are going to keep rising. They'll be through 3.0% soon on the 10-year. They'll be heading towards 4. And finally, the day traders are going to wake up that we're in a new era that even Goldman over the weekend said, you know, the era of buy the dip is over. And unlike the budget director this morning.
Also said, Goldman said growth in the economy of 18%. We want to buy stocks right now.
For the end of the year?
Goldman's pretty bullish on this market.
Yes. Well, there's different parts of Goldman. It depends on whether you're advising the mullets who they're trying to sell stuff to or whether they're advising themselves.
Their overall research is bullish on stocks.
Okay. All right. But the point, they did say that. My point is you're not going to turn this around. It's too late. And here's the key point. This will be year 10 in a business expansion. If we get through fiscal 19 with this massive borrowing without a recession, it will be month 124 of the expansion that started in June. That would be a historic record. That would be beyond the all-time record of 118 months in the 1990s when, as everybody here remembers, it was a far more benign environment. So if we look forward, we're going to have a tremendous, as I say, collision in the bond market, and that's going to reverse this whole giant bubble that has been building for the last 9 years.
David, so I think it's pretty easy to take a few data points and come out and talk about the end of the stock market or the bond market. But I think for viewers at home, it's very important to note that over the last 100 years, being invested has been a good place to be rather than not being invested. So for people like yourself who see the market just imploding, there's ways to bet against the market. But I think for most people at home who are watching our program, the doom and gloom kind of the headlines can sell, but history says that being invested in the market is a better place to be than sitting in the sidelines.
Yeah, I wouldn't necessarily disagree with that, but I would say buying the market in March 2000 was a terrible idea. It took you 7 years to get back to where you started. Buying the market.
So you would say sell the market in February 2000.
We are at an all-time peak. Here we are 10 years into a business expansion. They never last much longer than that. No one has repealed, recessions, outlawed recessions. So we're paying 26 times current S&P 500 earnings for fiscal for 2017, 26 times.
Well, 2017 was last year, right? We're trading 18 times expected earnings for the coming year, right?
Yeah, but expected earnings are meaningless because expected earnings are a hockey stick that always get adjusted down.
Well, we just had a tax plan. It's actually they're getting redone up because of the tax benefit.
Not really.
They're expecting 20% earnings growth in 2018.
They're expecting 20% earnings growth over last year. But let's just get this straight. In the 12 months ending in September 2014, a while ago, earnings GAAP, which count. I don't go with all this X items stuff, which is you don't count anything that's inconvenient. X items GAAP earnings were $106 a share. In the year just ended, they were $109. In other words, in 3 years, we made $3 of real earnings on the S&P 500. And even if they go up a little bit next year, you're at the end of a cycle. You do not value earnings at the end of a cycle at the same rate you value them.
By the way, they're not going up a little bit, David. They're going to go up 20%, partly on the tax bill and saving money. So we've got to be honest and clear in terms of what the earnings picture is going to be.
The thing that bothers me is that because, in large in part, because of the tax reform, that you have an economy that's growing. This is when you need to impose some fiscal discipline. And what we saw with this budget deal, with this $300 billion plus in additional spending that now takes us to a baseline, essentially, of $1 trillion annual deficit. That's what's so mind-boggling and befuddling and, quite frankly, dumb.
It's dumb, and this is the point where I want to disagree with the current budget director. There is no downward trajectory. They have locked in $15 trillion of new borrowing over the next 10 years. They have decreed the national debt will be $35 trillion by the time we get to the end of this 10-year cycle, and that's not counting a recession. That's assuming that we go all the way to 2027 without a recession. Never happened in history. Can happen. It's really kind of a ridiculous assumption. So one day, one of these days, the economy will roll over. There'll be a black swan, a red swan, an orange swan. I don't know what it's going to be. But when it happens, the deficit is going to explode to $2 trillion, $3 trillion. We're going to be in the biggest fiscal mess imaginable. And when those yields soar, and remember, they'll overshoot. Everybody keeps thinking, well, we see it coming. It's all been transparent. No, markets overshoot. And all the front runners who were buying the bond when the Fed was buying are soon going to figure out the way to make money is sell what the Fed is selling. That is shrinking its balance sheet by $50 billion a month beginning in October. And when the front runners start selling what the Fed is selling and the Treasury is borrowing all this money, you're asking for a biblical, collision.
What should they have done in terms of the budget last week? I mean, they needed to fix the sequester impact on the military. This is what the Republicans will say.
Well, they're full of it, okay? We are talking about military spending that's crazy. If you take all the hostiles in the world, China, so-called hostiles, I don't believe it, $200 billion, Russia, $70 billion, Iran, $12 billion, the whole GDP of North Korea.
What do you have to say about the fact that 50% of the planes in the Navy are not flyable?
That's because they're conducting 7 wars that we don't need to have.
Regardless, the military is not up to speed in terms of readiness.
No, we could get out of these wars. We get out of Afghanistan. Why are we still there 17 years later? What are we doing in Somalia? Why are we mucking around?
These are different subjects. No,
but that's why all this money allegedly is being needed for defense.
But he makes a point, though, and James Freeman agreed with the sequester cuts in defense and felt like that the Defense Department was not being well run and the money that it has to fund it not well allocated. But it raises the issue of its vast government mismanagement, and the solution by Democrats and Republicans has always been just throw more money at it.
Yeah.
Again, opioid crisis, just throw some money at it. Yeah. We're not going to track how the existing money has been spent. Throw more money at the Defense Department. Throw more money at child care centers and at infrastructure spending. And nobody tracks it. Of all the people who were upset about the shovel-ready jobs that didn't show up with the Obama stimulus plan, why are they now cheering $200 billion? By the way, $20 billion in infrastructure spending in that budget last week, $200 billion more to be proposed by President Trump today.
That's
why, again, it's like, well, I like it if a Republican president does it. I like it if a Republican Congress does it. But I hate it if the Democrats do the same doggone thing.
Well, here's the scandal of it. To get $82 billion for defense increase that they don't need, no way do they need, they agreed to give the Democrats $65 billion more of domestic spending that we absolutely can't afford. So now you have the warfare state, the welfare state ganging up to kill the fiscal outlook of this country, and you have the Fed finally saying we're not going to monetize the debt.
When you say that they don't need the military money, I mean, to what do you attribute all of these accidents that we report on every day?
All these accidents that you report, all these accidents that you report on is because they're running the military red hot around the world, and they shouldn't be. All they have to do is stop, and there wouldn't be so many accidents. And we don't need to be running the military at this rate because there. Do
you think that's one of the reasons that ISIS is now on the run? Our military?
We created ISIS.
Come on, David. Now you're going off the cliff. Now you're going off the cliff.
We left all the...
We created... Who specifically created ISIS?
We blew up the political consensus in Iraq.
You mean President Obama going into Iraq instead of Syria and not... getting his arms around. Is that who created ISIS?
No, Bush going into Iraq blew up the tentative agreement between the Shia and the Sunni and the Kurds. That blew up the whole country. When we finally left, which we had to, ISIS then took all the weapons we left behind.
So your point is, that, since it was created under Bush, we shouldn't give the military any more money to put ISIS on the run? I'm not sure I follow. I don't follow.
No, I'm saying we should stop intervening everywhere in the world because it is not a threat to the interests of the United States. Why did we go after Hussein?
I think that
right now, different subjects.
We're not making any spending priorities at all. If the military is the priority, then we need to cut spending elsewhere. So we're not paying out more in interest on our debt than we will in defense spending.
The interest is going to compound like you wouldn't believe. We've gotten away with $300 billion a year because interest rates.